The long-struggling Gap served up some more bad news for investors after the close yesterday. The retailer slashing its sales outlook and announced a CEO shakeup at Old Navy, which is a big part of its business. It's more than half of its sales, and it's been an area of strength mostly for Gap. The shares are down 19%. Brian Sozzi, you have been outspoken, shall we say, on Gap in the past. What's your reaction to this news?
This is just another sign that losing is in the DNA of Gap. I don't care who you put in the leadership position there at Gap. The company just has this culture of losing, especially over the past 5 years. So this is a very disturbing warning because keep in mind, you go back a year ago, 2 years ago, Old Navy was seen as the gem inside of this Gap portfolio. To see now today, this company coming out saying we're going to boot a longtime executive in Nancy Green, who really helped drive that Athleta performance. That's the Lululemon competitor inside the Gap portfolio, to essentially boot the person who helped bring that business to fame, and now boot her after some execution missteps over Old Navy. It just tells you that nobody seemingly can get it right inside of this company. So what is the problem over at Old Navy? I was talking to a couple folks last night, Julie, and they're all pointing to the new bod equality launch in August of 2021. That is where Old Navy promised to carry every style and every size for all sorts of women consumers. A very noble initiative, given Gap's stature. It had to happen. But what this has now led to is excess inventory, too much square footage in the store devoted to styles that people may not be buying, and less of a focus on fashion. And all in all, this boils down to just significant inventory risk now in the stores and product that has to be marked down. And if you go to the Old Navy website, you never want to see on a retailer homepage new arrival section offering 50% off. That is just a major red flag. Never want to see that at a retailer. All in all, Julie, my take is quite simple here, and maybe it doesn't surprise you because you and I have been working together for some time. Gap equals awful. Bottom line is here, this company explored splitting itself up about two years ago, decided not to do it. This company is now a failed experiment. It is time to chop this company up into various pieces and either A, sell them off, or B, spin them off into publicly traded companies. Terrible company right now, terrible leadership. It's just not getting it done.
Well, I remain a fan on a consumer basis of Athleta. And the difference between Athleta and some of the other brands is the quality of the clothing. And I think that's something maybe the Gap, again, from a consumer perspective, needs to get back to. I know somebody tweeted at you about that particular aspect, right? And maybe sort of a tightening of selection, if you will. That is, there is such a thing as, it's great that they're offering all the sizes. That's not what I mean. I mean, in terms of styles, curate the styles, right? Offer what people want, and you don't have to offer a million different types of denim shirts or whatever it is. Offer a couple that people actually want to buy. You
really want to get a sense of how screwed up the situation is, Julie. Gap's market cap right now, the stock is down 65% over the past year. And I've had some people mention to me, you want to start watching the cash levels at Gap, but that's a discussion for a different day. Stock is down 65%. Market cap is $4.3 billion. Lululemon's market cap is $49 billion. Now, Athleta inside this Gap portfolio is a true gem that has been putting up very strong results. The valuation disparity between Gap, the overall company, and a company like Lululemon is just significant, telling me that perhaps Banana Republic is completely worthless and worth zero.